Welcome, everybody, to the NARPM Radio podcast. I'm your host, Pete Neubig, the voice of NARPM. Ryan Killian, president of RENU Property Management, is at the forefront of what many are calling the operator era in rental housing. His work focuses on helping institutional and private owners unlock performance through technology, data-driven decisions, and operational scale, making him a go-to voice on the future of property management. Ryan, thank you so much for being here.
Thanks, Pete. Appreciate you having me.
All right. So you're with RENU Property Management. Tell us a little bit about RENU. How many markets, how many units, breakdown, just and give us a kind of a little history of RENU and you in the industry.
Yeah, sure. I mean, I started back in right after the GFC, the Great Financial Crisis, linked up with American Homes for Rent initially and helped them acquire 20 plus thousand homes. Then helped them build various departments around the company. Was there when they went public. Phenomenal experience and insights into really what scale looks like in the property management business. And then I went on to First Key Homes after that to do the same thing essentially. As First Key was a little bit later than AMH was.
Are they public as well? First Key?
They are not public. No,
they're public. Okay,
they're still private. They're owned by Cerberus. But great group, scaled very quickly. They had a mission, realized they kind of didn't get there as fast as the early movers like Invitation and AMH, and then decided to go quickly. It's interesting. That's where I got my first interaction with RENU. My current partner and co-founder, Travis Bonwell, current CEO of RENU, had an acquisitions underwriting platform that at the time didn't exist anywhere that I was aware of. Now most folks have something like it. But at the time, using, national syndication with various, MLS systems and other data systems to auto-identify based on predefined buy box criteria and then underwrite and stack rank acquisition opportunities didn't exist. People were building, massive numbers of teams to go out and collect that information, underwrite, et cetera. So I brought Travis and RENU in at First Key Homes to help us acquire quickly, and we did so. Buying as many as 700-800 homes a month, and quickly building that portfolio. So
was First Key managing their own homes as well, or were they third partying that out at the time?
They were, and it's interesting you say that because, what happened is we got so big so fast and scaled so quickly through acquisitions that we had to actually pause to let the operation side catch up. And it was at that, yeah, exactly. Right. It's the tale as old as time. It's at that time that, so we put a pause on that. That was around end of 18, maybe. And I shifted over to the ops side of the business to help get that in order with several great folks at First Key Homes. And, we built out a, best-in-class operations platform to help service all those thousands of homes that we had brought in. Did that for a couple of years. COVID hit, obviously. At the time in COVID, I was fortunate enough to be over construction and operations and maintenance at the time, 120 technicians under my umbrella, with vans and tools and, performing 60% of work orders in-house. And man, as hard as that was, I learned some of the best lessons I've ever learned through that period of time about systems, about scale, about automation, about understanding what should be done in the field versus what should be done in back office. And then really just understanding how little problems at, 5,000 homes become, the Grand Canyon of problems at 25,000 homes. So anyhow, during this time also coming out of COVID, Travis, back to RENU, right, who had continued to seek out institutional, capital for which to underwrite and identify acquisitions for, decided that, he had seen far too many times, kind of like First Key, right? Like operations lags the acquisition too much, right? It's never the first thought. And the thought was always, hey, let's buy this right. Let's get, rents are going up. And at that time, if you recall, rents were going up in perpetuity. Underwrites were very aggressive and you almost couldn't be wrong because
money was cheap.
Money was cheap. And, he said, look, this is not going to be sustainable. I need to build, to complement my acquisitions platform at RENU. I need to build an institutional quality, property management platform that scales and asset management platform, not just property management, two very different things, but it's got to scale, right? So he called me up and said, look, are you interested in partnering and coming over here and help build this thing at the level you just did First Key and AMH? And, Travis is a friend and a mentor in a lot of ways, and couldn't pass up the opportunity. So I went over there in 21 and we started to build quickly. Again, he already had the property management platform, but we started to really scale the systems and structure everything for massive scale. And we were buying for a couple of groups at the time, scaled them up to, 5,000 homes each, put them under our management. And, we've been doing it ever since.
So you basically help institutionals purchase homes and then you manage them for them as well.
Correct. Well, that was what we were doing at the time I came over. And then, of course, everything happened in 22 where interest rates went up and folks stopped really buying at any kind of, most stopped buying went to a halt for 6 months, if you recall. And then it started to trickle back in. And even today, it's not a lot of acquisitions happening on the single family side, even prior to the executive order stuff. So we wound up, kind of getting put on mop-up duty for property managers that were underperforming, which is kind of what Travis saw coming, right? Third-party property manager, you build it on a mom and pop kind of platform, and then you try to bring in institutionals, and there's a wide gap between the level of expectation from a reporting standpoint, asset management standpoint, between mom and pop investors and institutional investors. We found a lot of folks who went with some property managers that, just weren't delivering on the scale that the capital expected. And we were able to come in, show them our tech stack, our reporting stack, our centralized structure, which really is born out of, being an SFR scattered site manager, right? You can't, by definition, if you manage scattered site homes, you're centralized, right? Because you don't have a leasing office on site to go to. You don't have an apartment building complex or amenity center to go sit at. These are scattered homes. So, they were interested in that kind of structure, in some of the efficiencies we'd seen and the ability, our pricing model, obviously, which allows us to pass through some of those savings onto those capital groups and our client owners. And, we've been doing that ever since. And we also then saw, maybe a little later than we would have liked, but we saw the BTR side of things just kind of going, and not know the uncertainty around rates and how and when people could grow their SFR portfolios, again, prior to the executive order being a thing. We really wanted to make sure we saw an opportunity to flip the BTR model on its head. Because again, most BTR sites were going with the traditional multifamily apartment manager, thinking that these are just horizontal apartments. And I think there's enough content out there, and I've certainly been a loud voice in this camp, that they're not the same thing, right? It's a very specific playbook. It's not exactly scattered site SFR either. It's something right in between. And, we were able to bifurcate, given our tech stack and how we built it. It's all modularized and can be bifurcated out based on the specific asset or client needs that we have. So we saw an opportunity to go and show capital that was interested in BTR, hey, you're leaving money on the table from an operational perspective. Early on, again, with rents still continuing to appreciate year over year, the message or the value proposition didn't resonate as much. But obviously in the last year, seeing what continues to happen, this is our kind of operator era, which is what I've been kind of saying. Rents aren't going to save anybody anymore. That's not where we're at today. And it might not be there for another 5 to 10 years. So, your operations can save you, whether it is, automation, centralization, whether you're using AI. It's really just about putting the right people in the right seats is what we found, and making sure that anybody who's in the physical market or in the home, in the asset, isn't doing something that could be done anywhere in the world. And that's really what it was. It's simple, but not easy, right? Don't let anybody who's sitting out there in a market, who's in the field, who's talking to a client or prospect in person, touring them through a home, don't have them do anything that can be done from a desk that by someone sitting anywhere in the world. Keep them focused on the asset, keep them focused on the prospect, keep them focused on, the business relationships they're trying to make to promote their asset. That's really been kind of the underlying secret to our success.
How many markets are you guys in right now?
We're in 13 right now, but we've been in as many as 26 and are ready to be in those additional 13. opening a market kind of along the lines of a centralized strategy. Given that we've got broker's license everywhere, very easy to do, right? Very easy. We've got a fairly decent and repeatable recipe for hiring field employees. That's, very quick and easy to do. You're always going to win and lose sometimes in the HR world, but it's easy to get set up in any particular market, and we're prepared to do that in multiple.
So let's dive into your operations, expertise. What do you think's changed in the last few years that's made operations such a defining factor in performance?
Yeah.
Is this just a few years thing? Is this since the great, the Great Recession of '08? What do you think?
Yeah. It's a great question. I mean, it's a layered answer, but essentially, it's always been there. It's always been a problem, right? It's always been a major factor in, determining success. It's just not been paid attention to as much because, again, for a large portion of the last 10, 12 years, you've had rental appreciation, and you've been able to benefit from that, which covers up a lot of mistakes and inefficiencies. What's changed in the last couple of years is that has gone away. There's been some oversaturation in certain markets in particular.
It's funny. I was at an IMN conference last year, and it was the first time that I heard, resident experience. And I've been going to those conferences for 10 years, and like no one's ever talked about resident experience. Now that's all the rage. Right.
Right, man. That's right. No, it's real. And again, that's a slightly different concept than, operational efficiencies and performance, but, it's certainly a factor. And those two things in particular, is where you can win right now, right? Like retention, resident experience equals retention, right? Now, sometimes that comes in direct conflict with cost, but if you're doing it right, you can find that perfect blend and you can ultimately lift your NOI and your P&L. So what's changed is you can't get bailed out by rents anymore. No longer is like, I bought the best asset in the best location and I'm going to be better than everybody else because I've got, an asset that just can't lose. Now you've got to operate well. And, what was once covered up by these, the income side of the income statement being, your savior is no longer. So, it's the operator's time to shine right now.
You think that, like there's been a huge increase in number of vendors that support this industry, number of money that's coming into the industry, and just the number of software that's been available to manage, SFR. Do you think that has that's been a big change in helping operations get a little bit, I would say, leaner or help performance?
I'm going to give you a fence answer, sitting on a fence answer. I mean, yes, there are certain vendors and prop tech that have been transformational in this space. No question about it. They help you scale. Again, they can give you very inexpensive ways to replace, as a property manager, things that you could otherwise not do as efficiently or as inexpensively as you can with this prop tech, right? Think of, certain like photo services, Planomatics. I'm a big fan of Planomatic, right? There's been things like that have come through and that have been transformational. But by the same token, there's been such a flood of these tools and systems and prop tech in general that it can be distracting, too quickly. And we've seen, and I'm sure you've heard plenty of horror stories where PMs have been sold on a software or a service or a combination service and software that was going to be transformational. It was going to reduce overhead. It was going to improve performance and ultimately output. And none of those things happen. They plug and play. They go on with the rest of their business and something tanks. Either they can't hit a deadline or the quality is not what they thought. And they have made decisions about their own business, what it could be overhead count, it could be their tech stack, that is hard to undo. So I think it's, yes, it's been a factor and it's been a positive factor in some cases, but it's also a trap if people aren't careful and don't do their due diligence and don't really at the bottom, at the base of it, if they don't ask themselves, is this accretive either to my client or to my PM business or to both ideally?
Does RENU use their own software, or do they build something, or are they using out of a box package for their property management software? Do you guys use
We're Appfolio.
Appfolio users? Okay.
But we've bolted on multiple additional workflow software and tech tools, some of which is custom and some of which is also, again, other acquired software or SaaS software that we bolted on. So we've got a mishmash of our tech stack.
So you touched on this a little bit earlier, but where do you see traditional property management models falling short today?
Yeah, I think it's one. I think with respect to BTR and MFR, I think a tried and true philosophy of I'm going to throw I've got a model. I'm going to throw 5 or 6 employees on site because that's what we do, and I'm going to pass through every single cost I have. Phones
To the investor. Yep.
Yeah, I think that is where times are changing, right? And you're slowly but surely seeing folks evolve. And again, you've got groups like us who are rooted in centralization because we were an SFR, right? I mean, SFR is finally old enough where you've got traditional SFR managers that are now jumping into BTR and MFR. And that you couldn't say that 6-7 years ago, right? You were, because MFR and BTR, they were all just competing with each other. So there was really no kind of competition from a pricing structure and an operating model. Now, again, you've got where SFR operators like RENU are jumping in and saying, hey, I don't need to pass through telephones or computers or my software. That's baked into my cost to you, my PM fee to you. So you've got right there, I think that's, if you're a PM and you're not thinking about how to address that shortfall, that model's changing, I think that's where you're falling short for sure. Additionally, again, centralization is such a buzzword, but if you're not thinking about how to kind of do what I said at the outset, if you're not thinking about how to remove tasks from on-site that don't have to be done on-site, then you're falling short. You're doing yourself a disservice and you're doing your clients a disservice.
One of the things, I'm CEO of VPM Solutions, marketplace that connects property managers with remote team members, right? And one of the things that has been very, the single family industry has been very early on virtual assistants. The multifamily, they still want to hire local people, put them they want to hire a local leasing agent and put them in that apartment complex or that BTR. So I actually have run into what you're saying is the old school model when they can actually be more centralized and they can actually extend some of the tasks to a remote team member that would get paid a third less, but a lot more than than what people that they're in their hometown. So find that very interesting. Now,
and your risk is the same, right, Pete? I mean, your risk of performance really it still exists. You could make that bad. Again, we all try to do our best and hire the best people and get out of their way, but the risk of human failure exists either way, whether you're virtual or whether you put somebody on site. And why waste a body on site to pick up the phone and call somebody when you could be waiting and interacting with real residents that are on site or prospects that are coming on site or walk in a unit that can't be done remotely, right? That's kind of a core of our philosophy is don't do it on site if it doesn't have to be done on site.
Yep. That's we say what should be handled by a remote team member. Anything that does not require a license does not require to be at the property.
There you go.
All right. So most of the folks that are listening to this are what we would call traditional property. Would call smaller operators, right? Most people listen to this probably have 500 units or less that they third party manage. What are institutional operators like yourself doing differently that small operators should be paying attention to?
Yeah, great question. I think it starts with your reporting environment. Are you looking at all of the factors that impact a P&L? Daily, weekly, monthly? Do you have somebody dedicated to evaluate how the various levers that you're pulling throughout the portfolio, whether it be pricing or internal completion of turns and maintenance, whatever the lever is, are you looking at how that impacts different things? Are you looking at your choice to eliminate full paints from your turnover process? Are you looking at how that impacts vacancy, days on market, ultimately the rent you're achieving? So that's one, right? And then when you have that data in front of you, you know where to find it. And by the way, zooming out, if you don't have that data, find out a way to capture it. Put a process in place to say to your turn team, I'm not just going to measure the day somebody moves out and the day the next person moves in, or the day somebody moves out and the day the turn is complete, whether it's done by your own technician or by a vendor. I need to understand the various steps inside of that. For example, turns. We'll stay with that for a second, right? We at RENU measure 7 sub steps of the turn, right? Move out to move out inspection to bid being approved, to bid being created to bid being approved to vendor start to vendor complete to QC to punch list, and then punch list to final job completion, right? If you're not looking,
final job completion to getting listed.
Correct. And then further getting listed to lease signed, and then lease signed to move in, right? Those are all those, and it's beyond the turn process, but your point's right. If you're not looking that in depth, you're leaving money, vacancy, whatever you want to call it, on the table. And ultimately, that's not good enough for an institutional owner. They want to understand that you are identifying every single place where dollars can leak, and dollars don't just leak by not getting a high enough rent. They leak from vacancy, as we all know, right? So if you don't have the ability to see that in your system, start thinking about a way to capture it, whether that means getting a new, building your own system, which is what we've done, or, finding that cool new prop tech SaaS platform out there that captures those data points, and then train your employees on it. Hey, look, this is our source of truth. This is how we perform. The only way we get better is by measuring it, looking at it, and understanding how we can improve it, right? So, that's what I would say to anybody who's, looking to appeal to an institutional investor, is understand your business and your operations at that level. One, by default, you're going to get better, because you're going to look at it and you're going to go, well, this doesn't make sense. I have to be better here. Some people probably think they're doing pretty good, and they just don't understand where that waste is.
And they're doing good in maybe 3 of those 7 factors that you brought out, right? And like they're doing good here, and here, but this is where they're not doing really well. That was I really like that breakdown, because I've heard of that on the sales side of things, right? So like you have 7 steps in your sales process. You want to track every step, but I never even thought about it like doing that on the turn. You got to see where your dip is. So basically what you're saying, Ryan, is that institutional operators are more data driven than your smaller operators.
That's right. That's exactly what I'm saying. And I think, another practical example of how we kind of leverage the level of data that we have is with our renewal pricing strategy, or new lease for rent, recommendations from a pricing standpoint. Having the ability and tools and systems to be able to predict where occupancy will be in 6 months for a particular client or site or whatever the breakdown, gives us the ability to say, hey, I know that you feel like your pricing is good right now. And it is. It's good for market. However, you've got an inordinate amount of, lease expirations in 2 months. We've sent out renewals. We don't have all the data back yet, but we do know that our current lease market is slightly under where those leases signed last year and the year before. You're going to lose more than 50% of them, most likely, based on the data we're seeing, right? Again, based on tracking other data. Now, we're going to keep watching this, but we recommend a special promotion on this particular unit, like some sort of loss leader pricing. We have to get people in the door. We have to look at, offering multiple, lease length terms, right? 15 months.
So you guys aren't just looking at your internal data; you're looking at external data as well to make decisions.
Correct.
Nice. All right. So when I was researching you, you've mentioned decision velocity a handful of times in posts and also in the questionnaire you sent over to me. It's not something that people talk about enough. What can you define what decision velocity? Can you tell people what decision velocity means, and then give an example of where speed or lack of it materially affects performance?
Yeah, I'll stick with the 2 examples we just went through. But
decision velocity is the Ryanism. The decision velocity is the Ryanism.
I've got a lot of them. This decision velocity, it is the speed at which you're able to make decisions about your business, impactful decisions about your business. And I don't mean just, yes, put that on the market for rent. I mean data-driven decisions that are going to impact the performance of your portfolio over months and even years at a time. So stick with turnovers for a second, right? We've got a handful of clients, institutional clients, that really like to have their hand into what because they've got budgets they've got to hit. And oftentimes, covenants for their loan, their lenders that they've got to hit. So they want to have a real active hand, or at least visibility into the day-to-day decisions you're making. So some of that includes turnovers, right? Or large maintenance work orders. They want to have the ability to approve them. That's a very positive thing for a capital group to want to have. However, if they're not quick, and that if they're not in the system, which we have the ability for them to enter our system and make decisions and ask questions live, right? But if they're not in there on a daily basis, what happens? You delay the start. We just went from the 7 legs of the turn that I mentioned.
Yep.
All of a sudden, we start to see our days from bid complete to bid approval exceed a day, 24 hours. That's a waste of money. Right. At the end of the day, that means that the capital group that wants to have a hand in that, to keep their eye on it, they're actually doing more harm than good, right? By causing additional vacancy. And while their heart is in the right place to make sure that costs don't go crazy and it's to their expectations, they're actually costing you occupancy. And so over the course of X amount of turns over the year, there's real dollars that go out the door. Same thing goes for the for rent pricing and renewals, right? You want to get your renewals out there. Certainly we have, lease, terms that we have to stick to and have to get it out there within 60 days, but we prefer to get it out there 90 days in advance. Now, again, your ability to capture renewals hinges on the ability to get it out in a timely fashion. Same thing with new lease pricing. Because we're using, our predictive analytics to tell us where we'll be in 2, 3, or 4 months, we're going to have a hand in, hey, this is what we should be doing with pricing right now. Yes, it might look lower, or it might look more bullish than we should be, but hey, you don't have anybody expiring in a couple of months. You can afford to be a bit more bullish right now. And again, taking too much time and making that decision almost defeats the purpose. So that's what I mean by decision velocity. And, if you're not required to get approval by your client, whether it's a mom and pop owner or an institutional investor, then if you're slowing it down internally, you're doing yourself a disservice and your clients a disservice.
Do you find that the mom and pops take a little bit longer to approve big maintenance tickets more so than the institutionals, or are they both stingy?
I think they're both rightfully so stingy and ask good questions. Again, we are so I have examples of both for both types of ownerships. I can tell you that for sure. Again, we are for that. We are for an active ownership group who wants to have a hand in, because at the end of the day, what are we trying to deliver? I don't want to just hit a turn time because for a badge on my shoulder, right? I want to do it because it's going to meet the financial goals of whoever my client is. So the more they tell us and communicate to us what their goal is, where do you want to be, right? We can reverse engineer our processes to arrive at that outcome. So we're for that. So yeah, they can be stingy, and we're for, again, as long as that question comes within an hour of when I ask them for it, I'm all for it. We want that healthy discussion.
How do you get them to approve sooner than, like, do you go out and get 2 bids? Is there a lot of education on the front end? Because a lot of these guys, especially the mom and pop investors, don't know what the price of a water heater replacement is or anything like that. The institutions might know a little bit more, but how do you get that speed? Like, how do you work on that metric?
Yeah, it's a great question. Well, one, I will say, the various large language models, take your pick, Claude or, ChatGPT or whatever, they make it a lot easier to figure out with a couple of keystrokes what's a water heater cost in Austin, Texas, right? But so you are getting a more educated ownership group these days, even with respect to things that you wouldn't normally expect them to know, like how much does a water heater cost? But to answer your question, it comes with, yes, thinking about it in reverse. And this is what we talk about a lot internally at RENU. Pretend you're the owner. What would make you accept this bid or approve this? And once you come up with that answer, if this is your money, and if you're supplying that, then you can expect a quick decision. If you're not delivering on that mandate, what would you need to make this decision and spend your own hard-earned dollars? Then do better. We need to do better. We need to provide more. So to your question, sometimes that means over a certain price threshold to multiple bids. Sometimes it means just a very clear, specific line-by-line breakdown of what is included in the cost. Sometimes it includes repair options and replace options, right? Hey, here's, and in turn, here's your replacement option. It's X, right? That's the full boat. We're not going to save this thing, this water heater or this refrigerator or whatever. And then here's your repair option. But also with the repair option, what's the other piece of data you would need to know to
How
make
long it's going to last?
Exactly. Right. So if you're not providing that, how can somebody on the other side actually make a decision? Right. So yeah.
Basically, here's the repair. They'll give you 90 days, like a 90-day, refund policy. So it'll last 90 days or
Right.
it'll last 91 days.
Very different decision than if you say this will get you through the next 2 years, right? Very different decision.
Yeah. Interesting. All right. So you guys have grown rapidly. What in your, like, you've done this numerous times too. What typically breaks first when you grow in a portfolio too fast?
Yeah.
And don't say everything, because I know everything breaks, but what breaks first?
That would be, I appreciate you not letting me off the hook there. I would say field operations probably breaks first. Yeah, that's the biggest thing, because again,
that's if you're growing in multiple markets, or is that growing in one market?
It can be one market if you're growing, like if you've just acquired or just signed on a client with 1,000 homes in a particular market, that's easily one market, right? Yep. So I think having a really solid understanding, because every model is different. So, sure. Operating model, and I'm not saying RENU's is the only way to do it, but it's all interdependent, right? I can't take somebody else's way of visiting vacant homes and the style with which they do that and the number of employees it takes them to do that at the cadence they want to do it and layer it into mine, because I've got it all works with our internal technicians and with our centralized operations managers. So it's all very interdependent, but ultimately understand your metrics. How many people at various levels does it take you to service a certain number of homes? Where are your efficiency gains? At what numbers in the hundreds or thousands do you start to reduce the need for additional overhead? So, and I think not understanding that is where we see the break happen first. It's also very difficult. I don't want to make it seem like it's simple. As you're growing, you learn these things somewhat on the fly, and you make mistakes and you pick it up and you do better, right? But understanding where that is, or the lack of that understanding, is what I typically see break first. People who say they've got they're groups who have a very solid foundation. They've got a decent tech stack. They're somewhat centralized, but they grow and they sell a client on that, prospective client on that, and then they get something under contract, under a PMA, and then they try to use surge resources, which can be trouble, right? Now, certainly there are great inspections platforms out there. I don't want to say there isn't, but it's a different level of performance. Are you prepared? Is your tech stack ready to absorb information from a third party? And then take it and make the same decisions and not hurt decision velocity by getting information from a third party. Again, these are the little decisions that permeate throughout an operational team that can ultimately hurt and have your property management platform come off much worse than it really is, all because maybe you didn't have the right planning in place for growth.
All right, we're up against time here, so I got two more questions here. Put your future hat on, like you got your little tinfoil cap there. What's one shift coming in the next few years that operators need to prepare for now?
Yeah. Is it an easy way out to say AI?
Yeah, that's too easy. Every one of my podcasts have mentioned AI in the last year. So yeah, you can say AI.
Well, I think a couple of specific examples though, right?
What about legislation? Like they just put this thing in with 100, like what I mean, so
that was going to be my second one, but yes, I think to hit AI for a second, you're seeing more and more folks. You see the great prop tech companies like Elise AI and others that are leveraging large language models that are, both chatbots and verbal bots that are having great success, and they are really good. You can't tell the difference. And they've got, if you do it right, you've got real ability to have the transition between the bot, whether it's verbal or chat, and go straight to a live employee. Those, if you're doing it right, and ideally if you're building it in-house, those things can be very seamless. They can reduce overhead, and they can even increase the resident or prospect experience. I really believe that, and that's coming. I mean, it's already here in some cases, but it's only going to get bigger.
All right, I'm going to ask the obvious AI question here. What do you see AI taking over all these property manager jobs?
No.
You
Sure.
so tell me what you see 3 years.
I see AI as being complementary to be able to be better property managers, not to take over property manager jobs. Now, are you going to have certain, overhead reductions? Absolutely. Like, are you going to need a call center because of what I just said? Maybe not. You may be able to replace a call center with a chatbot, or
reduce the call center and have some people for the overflow, right? Because I still like to zero out. I'm old.
Exactly. But the real property managers and the skilled team members, AI should be complementary to what they're doing. They should help them, create better, asset manager forward-looking reporting and analytics to help make better decisions around the portfolio, not remove their job completely, to answer your question.
All right, last question. If someone takes away just one action from this conversation, what should they do next? Because you hit on a lot of stuff, man. Wealth of knowledge, by the way. Thank you so much for sharing. But what do you think if somebody's listening to this? What's one thing that they should do next?
Yeah, I'll go back to the reporting and your data environment. What I would do is, if you were interested in listening to this and you were interested in the way I talked about turns, and again, that works for collections. We have 15 different sub categories or statuses of tracking and somebody who's delinquent, right? From the day one of being delinquent all the way through being evicted. If you're not tracking these sub steps right now, you should really think about it. Plug it into ChatGPT or any one of these and talk about the various different, some of them change by market, some of them change by asset class. But think about ways that you can better measure the things that happen in a particular phase or function of property management: collections, leasing, turnovers, maintenance, and think about investigating more deeply what your teams are doing and what your residents are experiencing within those little subsets.
Ryan, thanks so much for being here. If somebody wanted to reach out to you, what's the best way to connect with you?
LinkedIn is probably the easiest way. I'm very, very out there. Also, the RENU website, RENU.mgt.com. Can find me any of those places. And I'd love to talk shop or, compare notes. I'm always open.
Thank you so much for being here. If you are not a NARPM member, shame on you. You should not be listening to this if you're not a NARPM member. Join NARPM, NARPM.org, or call them at 800-782-3452. And if you want to be cool like Ryan and use some offshore talent or nearshore talent, check out vpmsolutions.com. We have over 45,000 people looking to work for you. They're in 120 different countries. You can find them, train them, pay them all through our platform. Ryan, thanks so much for being here. See you, everybody.
Thank you, Pete.